Hi dear traders! At the end of the previous trading week, investors were positively surprised by the US labor market condition. The US economy unexpectedly added 528,000 jobs. It means that the Federal Reserve may continue the aggressive key interest rate hike. This news boosted demand for the US dollar. The regulator has been raising the benchmark rate to slacken the inflation growth. Notably, data on inflation will be the main event of the trading week. However, before that, on Tuesday, traders will have a chance to evaluate a change in the Australian consumer activity. Experts at the WESTPAC, University of Melbourne, will disclose data on the Consumer Sentiment Index. The indicator is expected to recover after it slumped to the lowest level since April 2020. Such a decline was spurred by higher prices and the key interest rate hike by the Reserve Bank of Australia. The same reasons led to a decline in Australia's business confidence. In general, the local business has been experiencing uncertainty, manifesting moderate activity amid unfavorable conditions for economic development. However, according to the forecast, the indicator will increase compared to its previous levels. In other words, analysts suppose that business confidence will start climbing from its bottom. Such a situation may lead to a short-lived rise in the Australian dollar. On Wednesday, traders will start receiving data on changes in consumer prices. China will be the first country that will disclose its report. In July, consumption somehow recovered thanks to the better epidemiological situation. It means that inflation may increase. Nevertheless, economists suppose that inflation growth pace will remain at 2.5% per annum. This reading is within the targeted area and does not violate Chinese economic development. That is why traders may start showing interest in riskier assets. Notably, investors may begin pricing in the expectations of the US inflation report as early as today. This fact may influence the overall market situation, but we will talk about it a bit later. On Wednesday, during the European session, Germany is going to unveil its final inflation figures. Preliminary estimates show that consumer prices stopped climbing. In other words, the consumer price index stopped rising and even declined to 7.5% from 7.6%. Although inflation is still near its 40-year high, investors may see a positive signal in the slowdown. Meanwhile, the US may report a more significant slowdown in its inflation growth. According to the forecast, the indicator may slacken to 8.7% on a yearly basis. Since the price growth is not that fast, the FOMC is likely to alter its strategy to the one offered by Fed Chair Jerome Powell. At the last meeting, he announced his intention to switch to a less aggressive approach to monetary policy tightening. It means that the Fed will raise the benchmark rate slower than earlier, thus cutting support of the US dollar. Thus, traders are likely to sell off the greenback. At the same time, bullish activity at the US stock market is likely to increase. This is forecast for the beginning of this trading week. Which way events will go for real? You will learn that in our daily news reports. Subscribe to our InstaForex TV channel and see you soon.